Hi, Chris Chan here. What's up? Welcome back to today's video. From an all-time high across Dow Jones, S&P, Nasdaq, after the longest 11-year bull run in the US, we witnessed a market meltdown on 20th February 2020, where stock markets around the world recorded their biggest one-week decline between 24th to 28th of February. Now, what happened subsequently was when Saudi initiated an oil war with Russia on the 8th of March, and 3 days later when the World Health Organization announced COVID-19 as the global pandemic, the global stock market reacted and nosedived further into the steepest fall in the shortest time in the entire stock market history. Many markets around the world dropped by 30% or more, and we are officially in recession from the peak in less than 20 days. After this black swan event, we also saw a sharp rally on the 6th of April, and most of the markets have kind of recovered a half or more of the losses with ongoing volatility right now. So at this point, I just like to highlight that just as the share price is not a representation of the health of a company, the stock market is also not a representation of the actual economy. With weak fundamentals in the economy, this is what most seasoned investors or traders call a dead cat bounce. You can watch my other videos which explain what a dead cat bounce is all about. Okay, so let's move on. So with more than 3 million people infected globally, with so many cities and states still in lockdowns, facing an uncertain future, you probably have some of these questions in mind right now. So is the worst over? Has the stock market priced in the full impact of the COVID-19 crisis? What's going to happen next? And where is the market going to recover? How is the economy going to recover? So I personally believe this is just the beginning. First of all, we're only starting to see the effect of the coronavirus showing up on recent economic data. I believe the most have yet to come to realization the full impact of the situation. Now, nobody knows exactly what's going to happen in the coming 3 to 6 months. The global economies have also shown signs of contraction since 2019, and global debts have been piling up to all-time high above 250 trillions. Will this pandemic simply be a passing event, or will it be the needle that pricked the bubble leading to a further economic downturn? While there are some who are hopeful and optimistic, there are also many who believe the worst is yet to be. Typically, economists predict the market recovery can take place in 3 possible ways: a V-shaped recovery, a U-shaped, or an L-shaped recovery. So what exactly are they? These letters, much like its shape, reflect the duration it will take for the economy to improve or bounce back. The swift V-shaped recovery is a quick rebound. So that's the best case scenario which many are hoping for, which is also the most bullish and optimistic outlook. I would like to illustrate the V-shaped recovery using an analogy of a healthy person recovering from a fever. Now, you could be down for a few days, and after rest and medication, you eventually get back up on your feet, you recover in full, and you're up and running as though nothing has happened to you, right? We all know that there has been a significant drop in employment and consumer spending during this period of lockdown. And that, without surprise, may have led to some pent-up demand, waiting to be unleashed when the situation improves. People want to go back to their usual routine again, enjoy their preferred entertainment, upgrade their car, travel the world, etc. In fact, I read a report that MS flagship store in Guangzhou, China, recorded 2.7 million in sales in just 1 day after the lockdown was lifted in China. Right, the only question, of course, is will such spending be sustained? While a V-shaped recovery is not totally impossible, especially when it comes to stock prices, investors' confidence and market sentiments are key. Right, that has been the case for most of the market downturns caused by previous disease outbreaks in the past, like the avian flu, Ebola outbreak, the Middle East respiratory syndrome, or MERS in short. Right, what is the likelihood of a V-shaped recovery? In my humble opinion, slim. I'm not being pessimistic. Look, What I like you to think about is this. In your lifetime, have you seen so many countries in a lockdown concurrently for such an extended period? Can you imagine the extent of the damages to international and domestic trades, the loss in revenue, and the loss of tens of millions of jobs around the world? So what do you think? Would it be a V-shaped recovery, or would there be other possibilities? Now, in my next video, we'll be exploring other possibilities as well. So I would love to hear your comments below, and don't forget to share this video with your friends, and don't forget to click the like and subscribe button because your support can go a long way to me and my team. So look forward to see you in my next video. Chris Chan signing out.